Hello, my name is True Demon, and I'm the Devil's Stockbroker. Thank you so much for tuning in to watch this video. Before we begin, please understand I'm not a financial advisor, and none of the following content is financial advice. The following content is for educational and entertainment purposes only. Trading stock carries inherent risk, and you should always respect and understand your own personal risks when considering any investment. Please don't take what I say as gospel, and please do not trade based on the information that I receive and share through my content. Thank you so much, and have a hell of a time in the stock market. Hello, everybody. This is True Demon, the Devil's Stockbroker. I'm coming in from remotely and out of the office, so I apologize for the terrible audio quality, but I wouldn't be bringing you this if it wasn't extremely important. What I'm currently doing is I am looking at BBIG. BBIG, if you're not familiar with it, is Vinco Ventures. This is a capital raising acquisitions and holdings company that recently made purchases on multiple social media and crypto platforms, mainly focused on cryptocurrency and blockchain. They also, as I said, purchased a social media platform which is called Lomotive, not too different from TikTok. All of this news and buzz around BBIG has gotten a lot of attention, and the reason why I'm calling this out is because BBIG has had multiple squeezes in its past. You can count back to all the way back to 2020 in July when it made a sudden move and gained more than 50% of its value at the time in the span of about a month. The first real squeeze was back in the on the 21st of January, the same day that GameStop squeezed. It gained a additional. It surged by more than 200% of its value, coming down from a low of $1.53 all the way to a high of $9.40 in a single day. The trading on BBIG was considerably volatile all throughout 2021 when it moved from a close of $2.28 on May the 12th up to a high of $6.05 and closing at $5.25 on the 9th of June. And then the final, most significant move by far that was called out by yours truly back on the 20th of August in 2021 moved from a close of $2.40 up to an all-time high in the span of the next 2 trading weeks of $12.49. BBIG's retraced significantly since that time, but if you'll notice, looking at the on-balance volume, you see that the on-balance volume has continuously made plateaus higher and higher and higher. Here at Hell's Trading Floor, we refer to this as hellish divergence, and we've noticed that this is a major signal of accumulation by institutions and any entities and individual investors as well that are buying and holding the stock and refusing to sell it no matter how low it goes, in hopes of, most likely, purchasing more in the future. Now, the market is extremely red, and I understand that. Everybody's feeling pain, and everyone's scared to take a chance. But the one thing that continuously happens with all of these low flow, no index, no nothing stocks that meme traders keep looking into is that they are extremely heavily shorted. And the one thing that catches my attention on BBIG is that it has bounced off of its lowest levels 3 times this year. Back on the 10th of January, bounced off of a low of $2.16. On the 15th of March, it bounced off of a low of $1.97. And then again on the 26th of April, it bounced off a low of $2.18. Each time it's remerged in a huge way, but all without major catalysts. Now what's happened is BBIG's biggest news that everybody's been paying attention to is the release of TYDE. TYDE, if you're not aware, is a stock that is focused on the trading of blockchain and NFTs in a social space. And TYDE is a spin-off of BBIG. What does that mean? Spin-off shares are essentially a company that is splitting off from the main body and is going to trade on its own ticker symbol. BBIG is therefore splitting off into TYDE, TIDE. TIDE is going to actually be splitting off into a company with a slightly more than 10 million share float and is estimated to be valued somewhere between $5 and $10 per share based on a 10-to-1 split from BBIG. So everybody that is holding BBIG shares through to the dividend date that is going to end on May the 18th is going to be due 1 CRYPTIDE share for every 10 BBIG shares that they hold. So that means that for holding 10 shares of BBIG, which is currently trading at approximately $2.75, you can also own a major NFT market space that is going to be emerging into the market for a single share of CRYPTIDE, which is going to be emerging into the NFT market for every 10 BBIG shares that you hold. So that being said, for every share of BBIG, which is estimated at $2.75 for every 10 shares, that's $275. You get an additional share of TYDE as long as you hold it through the dividend date. Now, there's going to be institutions that are looking to profit off of that. And what's been happening is as soon as the news hit, after hours on May 5th, everybody started just running on the stock. Pay attention to what was going on during the session, during the after-hours session on May the 5th. This all happened in the span of a single hour. BBIG went from its trading of a low of $2.56, which has been trading between $2.40 and $2.50 all for the last month, suddenly surged by 40% to its close, but it hit a high of $4.18. BBIG, I point this out again, BBIG has surged by more than 200% its value multiple times. And BBIG continues to make a history of doing this, squeezing in huge ways, and it can do it again for multiple reasons, including massive overshorting, massive market maker involvement and failures to deliver, and third, gamma squeeze. So currently BBIG is being suppressed, and I suspect that this is so that hedge funds and market makers are able to create a loading zone where they can scare out retail, purchase more shares, get a cumulative number of these shares, and hopefully, in their mind, get a basket of TYDE shares that they will be able to short early on into the market in order to hurt them. However, if retail purchases most of these shares, note that BBIG is in a position to fail to deliver in a massive way, and market makers, if you recall from my previous videos, cannot tolerate failures to deliver for any significant period of time. So we're going to go into the details of this and understand exactly why that is. Okay, so here we're looking at BBIG's Ortex data. There's a lot of data on the screen, but I want to point out a few things before we begin. Starting at July the 30th of 2021, almost a full goddamn year, BBIG has been teasing 100% utilization. It's never quite peaked at 100% utilization, but no stock that I have ever called out that ever squeezed has needed to be at 100% utilization, merely 95%, because market makers and broker-dealers are always playing these stupid fucking games where they're just dancing around with options and just claiming that there's more shares in existence that they can continuously lend out for shorting. So it doesn't really matter. 99% close enough. Anyway, BBIG, ever since July the 30th, which is coincidentally about the time that I started calling it out back in mid-August of 2021, BBIG just had this outrageous utilization. And then all of a sudden, after having been on the threshold security list for a significant period of time, started squeezing the bejesus out of itself and went up to a high of $12.49 over the course of the next 2 weeks. Look at how many times, based on the Ortex data, that this stock has been on the threshold list. BBIG has been failing to deliver multiple times, which is just telling you that market makers have been over-leveraging themselves by ridiculous sums. The only problem that we have is that failures to deliver don't get reported except for an entire month behind. So the data is already useless to us by the time it reaches us because the SEC doesn't give a shit. So we have to have a way of predicting when these failures to deliver are going to be significant. So hang on to this information for right now. We'll get into it a little bit later. Next, I'm going to show you when the massive surges of security lending volume have a bit of significance to what BBIG's stock does. So if you look at periods of volatility, BBIG's stock has had these, it's difficult to see, I know, but as BBIG sells off, the security lending volume diminishes significantly until all of a sudden the stock starts squeezing. Like right here is when it reaches its very, very lowest, and the security lending volume reaches its lowest as well. Now, look at when the price starts moving up all of a sudden and then hits like $11, $12, $12.49, whatever. The security lending volume is still significantly low. Now, what happened was BBIG did a dilution event and sold a bunch of shares out into the market. They issued all these new shares into the market, and that allowed shorts to cover. Then suddenly the security lending volume flies through the ceiling up to a ridiculous 12.8 million shares lent out, and then the rest is history. It sold off from there, and there's been bits of volatility where it surged up again, automatic bounces and bear rallies and so forth. But regardless, BBIG just continuously sold off. Now, because of the dilution, the number of shares on loan versus its free float have been relatively mild. However, when you consider the number of shares in total that were on loan, and also when you consider it in the context of how long they've been on loan, you get a very different and more complete story. So again, notice the utilization nearly 100% through this entire time period. Just keep that in mind. We'll just get rid of it to clean things up. Now, look at the on loan shares. The on-loan shares has never been higher. 47 million shares currently on loan. If you do that of the free float, that's 26.5% of the stock. Now, at the time when this squeeze had happened, it was 59% of the shares on loan based on its free float at the time were currently loaned out. Now, this is still the largest number of shares that were loaned out at the time. But notice also what's interesting is that the shares on loan, it's been volatile, but for the most part, it hasn't really moved more than by 8% or so. So shorts have been more or less stagnant throughout this entire period, except for this one particular event where all of a sudden a whole bunch of recently entering shorts, notice the age of these shares on loan was 35 on average, and then all of a sudden just went up to 56.9. That is the result of older shorts staying in and newer shorts exiting. So at the same time, you have the free float rising, which honestly doesn't even make any kind of sense. The data is completely out of whack. So this has just happened again, where the data for the shorts shows that the age of the shares on loan is continuously rising with time. So either the shorts are not adding to their positions, which we know this is objectively false, or the number of shares that are held by shorts are so old that they are skewing the data, that every time that new shorts or recent shorts exit their positions and close out their loans, that it sends the data just skyrocketing to ridiculously new highs. And this is, I think, because the shorts that got in a long time ago, like way back down here, are still stuck in their positions, back down at $1.50, just at ridiculous losses. Now, keep in mind that the short interest of free float currently is at 18%, which is still a significant number. Cost to borrow is pretty moderate. It's high, but not absurdly high. But all the same, there's other factors that are going on here. So let's continue on and look at a few other pieces of data that Ortex provides. Number one, the short squeeze signals, which it's been right about so many times. Like the last time that it had a major squeeze signal was a type 3, which is by far the most successful and the largest moving squeeze signal that Ortex has done in my experience. And this one, if you had bought exactly on this day, you would have timed the bottom for for the squeeze, and if you held it for the next month, you would have profited by more than 400% on shares alone. If you bought calls, that would have been closer to like 2,000 or 2,500% profits, assuming you were buying them at the money. But you know, well, I'm trying to keep this as easy to follow as possible. Anyway, BBIG's been suppressed multiple times, and these short squeeze signals have yet to be wrong. They've been correct each time, albeit a little bit late on the draw. Now, this last move that BBIG did, all three short squeeze signals were triggered all at the same time. May 7th is when all these signals hit. Let's examine exactly why. Basically, you have a whole bunch of shorts that entered into positions from this time period up at $3 all the way down to this period, down to a low of $2.14 and middling about 250. And then all of a sudden, the CRIPTIDE notice comes out, and suddenly there's a spinoff. Why is that so significant? So the thing with BBIG and spinoff dividends is when you do any kind of dividend, if it is a special dividend, guess what happens to shorts who borrowed stock and sold it into the market? Because that's the nature of a short. You borrow a stock from someone who owns it, and then you sell that to somebody else in order to take a short position, air quotes. What that does is it puts you on the hook for the person who lent you the shares for any kind of dividend that comes in. So if it's a dividend that's basically cash, then what happens is the short seller must take that money out of their own pocket in order to pay the dividend to the lender, because the lender is still the legitimate owner of the stock. So they are technically entitled to that dividend. And what happens with a special dividend is, in this case, with a spin-off of shares, is BBIG is spinning off 1 share of CRIPTIDE for every 10 shares of BBIG. So for every 10 shares that a short has made, they are going to owe somebody a share of CRIPTIDE, which is not going to be available in the open market. It's only going to be available by direct distribution by the company. So they're going to have to pay either cash, or once CRIPTIDE is available in the market, are going to have to purchase those shares at market price and deliver it to whoever they lent the shares from. So that puts shorts in a really untenable position, because it's going to get expensive. That basically for every 10 shares of BBIG that they sold short into the market, they are going to need to acquire back about a 10 to 1 ratio of shares in CRIPTIDE. Basically, they're going to take by default, roughly a 10% loss, or in this case, more like 20%, because the estimated price of CRIPTIDE is going to be almost 5 times what BBIG, or about 2.5 times, 2.5 times what BBIG is currently worth. So we'll say about a 25% loss right out of the gate, just based off of that dividend. Also notice something else. I'm going to come down to the gamma squeeze potential of BBIG now. This is the whale flow data, which you can see on the charts. This is just the default whale flow for BBIG. It's overwhelmingly bullish. 92% of all the options that are currently trading in the last however many days this has been tracking is 92% calls. The vast majority of them buying. The bullish volume is massively overtaking by a 60% versus 40% bull to bear premium ratio, and bullish volume over the last several days has been over 69%. Nice. Also, factor in that a lot of the premium is centered around May the 20th. Now, I think that's a little bit early. It's a little risky, but nevertheless, that's where most of the premium is going. Let's also just look at the flow here by default. Notice that there's a lot of focus around a certain basket of strikes. Let's take a look a little bit further down on the heat map. We see that $3 is basically the main focus for 520. There's a lot of YOLOs out here at the $5 strike. I'm guessing this is probably part of the spread strategy, selling fives and buying threes, but that's just my guess. There are a lot of purchasing YOLOs out here at the $5 range. Now, this only tells you a little bit of the story. This is pretty limited because it's only showing you the most recent flow. Now, I'm going to take things back a little bit, but hang on to the fact that almost all of the flow this week has been overwhelmingly bullish. And let's pay attention a little bit to the Finra data. Now, BBIG has made multiple significant moves in the past, we'll say 90 days, but they've always been around the time that major short exempt volume came in. Pay attention to this column that I'm dragging my mouse over here. The short exempt volume shows some significant anomalies on multiple days, specifically when BBIG hit its high on March 21st. It hit a high of $3.28. A short time after that, 1, 2, 3, 4, 5, 6 trading days. Imagine that, T plus 6, it hit a new high of $3.04. Now, what is this a significant indicator of? Is that short exempts are being used to suppress the price. Go figure. BBIG's price got suppressed and knocked the hell out so that they wouldn't have to be forced to deliver to any of those options that were going to end up expiring in the money. BBIG was fighting hard for 250 the Friday before and came up just short. And then the market makers had to cover. They had to cover everything that was still in the money because there were a ton of in the money bets that expired. And the market maker was forced to pay those out. Now, they were able to drag the price down just enough, pin it just below 250 so that they could cash those out, but they immediately had to pay for it the very next day. Now look at the short exempts that just hit on the 6th. That was last Friday. The short exempts were ridiculous, almost twice as much as back on March the 21st. 473,000 short exempts. That estimates for every share traded was roughly, for every 100 short shares traded was about one short exempt ratio, one short exempt share. That's basically just only market makers. Only market makers can do this. Now, also notice that there's other factors, other things that kind of pop out at us is that whenever the short exempt ratio spikes past 3%, there starts to get like some really interesting action in the price where it's whipsawing up and down by 20% back to back to back on multiple trading days and throughout the week. Now, the last time that this has happened, BBIG started to get really volatile in mid-August 2021. It's happening again now. And on let's see, this is April 27th. There was what we call a mirror indicator where the change in the short exempt ratio creates this massive delta, this huge change in the short exempt ratio from the previous day. And it results in it's basically an indicator of huge volatility coming into the stock. Additionally, notice that the short volume is diminished rapidly. It was trading an average of like between 50 and 60%. Now it's hit a low of 41% on just a couple days before that. And overall, what this is just telling us is that the stock is getting volatile, which means that it's really hard for the market maker to control because they're having to use more short exempts, which if you remember, my lessons that I have described on multiple occasions is that short exempts that have not been located become failures to deliver. This is what we can use to indicate to us if failures to deliver are going to get out of hand. Because if the short exempts are not located, they become failures to deliver after T plus 4 days, and then on T plus 6, those are due and must be delivered according to the Reg Show filing rules. Let's take a look at what BBIG's done just over the last 30 or so trading days. And you'll see that from March 1st, the EMA 13-day versus the 48-day has been basically moving and oscillating very close, but the price has been pretty much in consolidation mode for a significant period of time. Out of nowhere, it pops because of, lo and behold, Cryptide news. So what I described to you earlier is of significant news to somebody, and they knew that it was at a good price when they decided to start buying it at that level. They did this on purpose. Now the price skyrocketed up to $4, and then they were like, well, it's a little bit too far, so let's short it and then smash retail and take their shares from them because we can scare them easily and drive the price down. This actually, it could work, but the thing is that we're a little bit smarter now. We're a little bit more experienced, and we've seen them do this before. At this current juncture, they have oversold BBIG, and they're basically only relying on psychology and fear-mongering to drive the price down in order to scare people out of the shares. Now, I'm just as frustrated with BBIG's management and the way that it handled the dilution and all of that stuff the previous year as much as anybody else. However, I see an opportunity when I see an opportunity, and I will tell you when I see it. This is an opportunity. A dividend like this is going to cost shorts a significant amount of money to maintain their position. They're going to have to pay through the nose in order to hold on to their short position. If they decide to do that, they are taking a risk that everybody who is holding through the dividend just for those shares is immediately going to sell and get rid of them after the dividend is paid. If that does not happen, then the shorts are going to not only be stuck with having to pay that dividend in cash in lieu of shares to the original lender, they're also going to be stuck with whatever the price is at that time and whatever it trades at from that point on. If you like BBIG for a long hold, then that could be extremely devastating to shorts. So they're trying to convince everybody that the company's not worth a damn. But obviously somebody thinks that it's worth something because on July 15th, there's more than 20% of the entire stock's float that's going to be traded in calls alone. Look at the entire heat map. What you see here is just what's going on between now and May 20th. But over here on July 15th, starting at $2 strike price, you notice that there's at least 6,000 call options from that strike up to a high of 53.9 thousand. That's 5.4 million shares worth of calls almost. Holy shit. Like, look at this gamma ramp. From the where it's currently trading now, if BBIG's price went to $5, then all of these would run in the money and be immediately exercisable for profit. Somebody could just exercise those and purchase the shares. But it's also 20% of the entire tradable float in BBIG. Like, holy shit. This is a gamma ramp that's able to actually put market makers underwater. And that's not it. Like, that's just July. If you look at the $5 strike for every single expiration after that, from October all the way through to January of next year, there's an additional 5% of the float that's currently trading on the call chain for that entire period. So all of these, if they stay in the money, will also be a part of that. So whoever's holding these calls is going to be part of a huge basket of retail investors that hold on to, wait for it, 35% of the entire tradable float of BBIG that will be entitled to purchase shares at their will at those strike prices. So this is an example of a gamma ramp that is able to carry the stock well past $5. And BBIG's already done this before anyway. Like, it's screamed past $12 from a low of $1.50 before. That's a ridiculous climb in price, like a 1,000% return in shares alone. Imagine just 10xing your entire portfolio in a single day. Like, dear God. So BBIG is one example of just another ticker that myself and Hell's Trading Floor have been paying attention to. It's well worth your notice if you're curious about trading these other tickers. And it's difficult to want to take a risk like this in a market that's so red. But one thing that I want people to keep in mind is that despite how red the market is, remember that the overall market is what shorts are relying on in order to keep their positions intact. A short position is a margin position. You can't be in a short position without having margin. It's just the way that it works. And right now, the market is dumping on everybody, okay? No one's special. Hedge funds, market makers, broker dealers, they're all getting the shaft right now, and all their liquidity is drying up at the same time. You think that they're having a good time in this market? Hell no, dude. They're getting absolutely reamed right now. And nobody has a good time when stocks are this unpredictable and profits are so hard to find, because to take a short position, you have to find somebody that's willing to lend it out. And right now, everyone's like, fuck that. I want to sell my shares because I don't know how far this thing's going to go down. And trying to find somebody who's willing to lend in this market, and then suddenly notice, like, the next day they wake up and the entire market's down another 5 points, or 5%, excuse me. Then they're suddenly like, well, shit, now I need to go and find the guy that I lent my shares to, demand my shares back, and go and sell them. And that's going to take me at least 2 days because of settlement time. So I'll be screwed in the meanwhile while it falls another 5% back to back to back each trading day. So if that happened, like, good luck. Nobody who is currently in this market holding long on shares is anywhere near in the position or even thinking about lending out shares and subjecting themselves to that lunacy. So right now, a whole bunch of short sellers are going to have a hard time finding people to lend them shares. They're going to have to find other derivatives to go and short the market overall. But when it comes to these like low float, low micro cap stocks that are trading for pennies and such, like, those companies are already like used to not being paid attention to, and nobody really trades them compared to like the major blue chip stocks, which are now hemorrhaging money. So that's just another reason to go and look at that stock. And it's like, well, hey, BBIG is not bleeding on, oh, look at that, it's got a dividend, so I might as well throw my money over there on the off chance that suddenly it hits a recovery wave and takes off over the next 2 or 3 years. So other people who are in the market are going to be thinking the same things, are going to be considering the same possibilities, and everybody else is currently just they're overall just, the market's in bad shape. But right now, finding the right moves that are going to carry you 20, 30, 50% returns over the next 3 months is going to be like few and far between right now. BBIG is just, in my opinion, one of those possibilities because it's so heavily shorted, and it hasn't been able to been forced down below its support levels in so long. And then it has a huge dividend, a huge catalyst that the entire BBIG community has been waiting for over a year. Everybody that was trading BBIG waited for this. We were looking at this like when's Cryptide coming out ever since September. And then all of a sudden, here it is. It finally made it, and suddenly it's got a whole bunch of attention. But if you look going all the way back to the beginning of time, the volume's just not there, which means hardly anybody's noticed yet. It's time to take notice. BBIG suddenly has their Cryptide dividend, and they're about ready to jump into the NFT space at a time where the crypto market is at an all-time low as of the last 2 years, if I recall correctly. So now is a good time to enter into the crypto market if you have some cash to spare. It's the only thing that makes sense because you buy when it's low and you sell when it's high. And right now the market is dumping. So that's my take on BBIG. If you're interested in this ticker, I highly recommend taking a look at some of the filings that are on Fintel, and exploring some of the other resources here at Hell's Trading Floor. If you're interested in joining us at Hell's Trading Floor to get immediate access to this due diligence, then come and check us out. We're at discord.gg/Hell's Trading Floor, or you can sign straight up. You can sign up for our membership straight through our Patreon page at patreon.com/thedevilsbroker. Thanks so much for watching, and I look forward to seeing you guys next time. In the meanwhile, have a hell of a time in the markets.